Welcome to Lawyer Up with HMC, where we unravel the complexities of legal battles, share insights into high-stakes litigation, and provide strategies for navigating the legal landscape. Join us as we delve into and discuss common legal issues and interview industry professionals and experts in the field. Whether you're a legal professional, a business owner, or simply curious about the world of litigation, our podcast offers valuable knowledge and practical advice to empower you in your legal journey. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, hmclawyers.com. Now here's the host of the Lawyer Up with HMC podcast, Kristen Hagg.
Welcome to Lawyer Up with HMC. I'm Kristen Hagg, lawyer by day, mom by night, and podcast host the third Friday of every month. In today's episode, we are going to be discussing spousal buyout mortgages, what they are, how they work, and how and when they are utilized in divorce and separation proceedings. And so our guest for today is Krista Lindstrom. Krista has been a divorce mortgage specialist for over 10 years. She started this career after going through an expensive, emotional, and devastating divorce. She realized during that process that there were limited resources available to divorcing couples and wanted to provide people going through divorce with the tools to ensure they came out of the divorce with financial independence. Welcome to the show, Krista.
Oh, thank you so much for having me, Kristen.
And today I will once again be riding the coattails of an HMC lawyer guest, Casey McQueen. Casey is an associate that practices exclusively in family law. She focuses on finding efficient and cost-effective resolutions or solutions for her clients through alternative dispute resolution and other litigation practices. Thank you for joining us, Casey.
Thanks for having me.
And now, ladies, I'm going to start by giving you both big kudos for choosing careers that help people navigate their way through divorce. As a child of divorced parents, I didn't want to touch family law with a 10-foot pole, but I have a great deal of respect for those that do it because the work that you do is so important and so impactful on people's lives. And on that note, maybe you can each share a bit more about your background, what led you or drew you to your current career. Krista, why don't we start with you?
Sure. My career, I've been a mortgage broker for almost 20 years now. And during my mortgage brokering career, I went through a divorce. I had small children. They were, I think, 4 and 5 at the time. And I found myself in a situation that I needed to find a new place to live. At the time, my family law lawyer told me that I needed to dissolve the mortgage or find an alternative. And I struggled to qualify. And I was like, nobody can give me any advice. So long story short, I ended up selling the house, the matrimonial home, and I ended up buying a new home, and my parents had to co-sign the mortgage for me. I was in my 30s. It was super humbling and a crappy experience. And I just thought that there needed to be a better way. And that's when I decided to do more research. I found out that there was something called a Spousal Buyout program, which is a federal program designed specifically for people going through marital breakdown. And I started digging in. And now we use that program all the time for clients. And I really wish that somebody would have offered it to me when I went through my own divorce. So I'm grateful that there's opportunities that solve problems for people now.
Right. And now you're going to be able to, well, and I know you do this is your life now, but today will be another opportunity to hopefully broadcast to people so that they can learn more about this and hopefully help some people going through those tough situations too. Casey, why don't you tell us a little bit about how you got into family law?
Yeah, so years ago when I was in university, I did my undergraduate degree in psychology. So I always loved that human interaction component and was also interested in law. And at the time I was working at a law firm. And so I was interested in both and was fascinated that family law kind of encompassed both perspectives. I was able to further my education and explore law and also continue on with that sort of client interaction that I find family law brings you. family law is also really unique because it touches on a lot of other areas of law as well. So depending on your file, you're going to see aspects of corporate law, tax law, things like that. So I just find it's a really unique opportunity as an area to practice in. So I thoroughly enjoy it.
Awesome. Yeah, no, and like I said, I can't say enough about the respect I have for family lawyers because, yeah, there's a lot of skills and a lot of juggling that goes into it. And yeah, I definitely have a tremendous amount of respect for what you do. And so on to the topic of the day, spousal buyout mortgages or the spousal buyout program. I'm going to start by asking the question I asked when this podcast topic was brought to my attention. What is a spousal buyout mortgage? Krista, you're the expert. Let's hear it.
A spousal buyout mortgage is a unique mortgage that allows divorcing couples, so married, common law, it doesn't matter, the opportunity to access 95% of their home equity, opposed to the traditional 80%. So typically you go to a bank and you can refinance your mortgage up to 80% loan to value. But under the spousal buyout program, there is a special provision for relationship breakdown that allows you to access an additional 15%, so up to 95% of the property value, which is sometimes like the TSN turning point in between being able to keep the home and not keeping the home, because that money then gets allocated towards the family, opposed to having to sell it and pay real estate fees or whatever. It's a great program for individuals or families who have perhaps limited equity or have a lot of debt that we need to wrap up. We can access 95% of the property value. So it's just more money. That's what it is.
Okay. And maybe you've already covered this a little bit, but maybe I'll flip over to Casey and you could talk a little bit more about how it differs from typical refinancing and what the different options are when you are dealing with clients that are going through divorce.
Yeah, normally what we see from our end, at least, and then when we get someone like Krista involved, whenever we have clients come to us that are separating, we've essentially got three options that relate to the family home or other jointly owned pieces of property, right? So one option is spouse one buys spouse two out, spouse two buys spouse one out, or we're selling it and dividing it. So it's really fantastic to learn more about these programs because two of the three options are essentially one spouse buying out the other. So to do it in a more advantageous way to the family unit as a whole is always a fantastic opportunity to explore. So from our end, we heavily rely on people like Krista to help our clients navigate through that.
Okay, and you were touching on the advantages of going this route versus others. We'll get into that a little bit more, but I guess you mentioned just debts generally, Krista, and it pays out the existing mortgage and other debts. What can be included in the buyout?
Yeah, that's what's great about the program. Providing it's itemized in the minutes of settlement or court order, we can pay out the mortgage, the penalty to break the existing mortgage. We can pay out individual or joint debt. We can pay out family law lawyers' legal fees. So essentially, if it's itemized within the agreement, we can pay it out.
Oh, wow.
One question I did have for you, Krista, on that is in some materials of yours that I've looked at before, it referenced buying out if there were spousal support obligations and maybe including some of that in there. Would that apply at all if, say, we had a scenario where someone was wanting to prepay their child support obligation for a short amount of time, or if child support arrears had accumulated? Is child support ever something that can be included as under that debt section, so to speak?
Yeah, so I've seen situations where we've included a lump sum spousal support. So if they don't want to do a monthly spousal support, if spousal support is part of the equation, we can do lump sum spousal support. I haven't done lump sum child support, but I don't see why we wouldn't be able to. If both sides agreed to it and either the court order or the minutes of settlement indicated it, then it could be included. I'm confident of that. Yes.
Wonderful.
And
That's
so now
great.
you're both getting into talking about the agreement now. And so I guess it would probably make sense to talk about the availability or the eligibility. Like in what scenarios can you get a spousal buyout mortgage, and what are some of the requirements that you're going to have to go through in order to do that?
Sure. This is where we work closely with Casey or counsel in coming together with what this looks like. Basically, what's required in order to fund the mortgage. So we're talking about now conditions inside the mortgage. We get a conditional approval, and then we have to satisfy those conditions. So this is where we go back to counsel and say, okay, I either need a court order or a minutes of settlement that lay out the terms of what it is that you've agreed to. So that agreement needs to be signed or court ordered and provided to the lender in order to fund the mortgage. Specifically, also, when we are talking about the spousal buyout mortgage, where we're accessing 95% of the property value, we do require something called an offer to purchase. So in Canada, to access 95% of the equity, the government says that needs to be a purchase. So what we do is we create a offer to purchase. Let's say Bob and Sue own a home and Sue wants to take over the home moving forward. We create an offer to purchase where Bob and Sue are the sellers of the home and Sue is the buyer of the home, and we sign the offer to purchase. So that's an additional provision within the spousal buyout mortgage that isn't typically required when you're doing a mortgage, except for when you're doing this program. And then we rely on Casey in order to be able to, or perhaps it could be a real estate lawyer, somebody to draft that offer to purchase in order to allow that transaction to be facilitated.
And one question for you, Krista. Sometimes from our perspective, we have clients come to us and say, I've already been in discussion with the mortgage broker and this is what we need to do. And we don't want a separation agreement. We just need basically the stamp of approval from our counsel or a letter of sorts. There has been the very odd file where a letter seems to have sufficed, but more so because counsel had agreed in the letter and said, yes, here's the agreement we've reached. We just have not yet had the opportunity to put it into a formal separation agreement or court order. Do you ever come across that from time to time? And if so, any suggestions from your perspective as to how to best navigate that for our clients?
So I would say 95% of the time, the lender wants to see those minutes of settlement or court order before they'll fund the mortgage. So there's a few things that need to be addressed. We need to address any child support obligations, any spousal support obligations, the division of assets, like who's taking over the home, do we owe an equity payout to a spouse, and then dower. And after all of those are addressed, then we can typically fund the mortgage. Sometimes we find when let's say there's a husband and wife, short marriage, not a lot of assets, no spousal, no child, then sometimes we can do a statutory declaration. But the majority of the time, we do need some sort of agreement that outlines those four things that I just mentioned.
Okay, which is very useful to know. The other scenario we find ourselves in from time to time is clients will come to us almost at the 11th hour and they'll say, look, I want to retain you. I need your help in terms of dividing the property and tidying up some other issues stemming from the separation. And one issue all of a sudden comes up is, oh, by the way, our mortgage is up for renewal next week. What do we do? And then they're faced with scenarios, even if one spouse is wanting to buy the other spouse out of the home, they're forced with an unfortunate scenario of, okay, now do we enter into a 6-month term, a 12-month term at significantly higher interest rates? And then obviously there's associated penalties in doing that as well. Do you see that from time to time? And is there any way through the spousal program to navigate a situation like that? Or does the renewal, does that kind of throw a bit of a wrench in that and we have to wait until everything is squared away to actually do the proper refinancing through the program?
Yeah, so that definitely creates a hiccup for sure, Casey, when you put time pressure on by a stamp in the sand that says your renewal date is this, it adds pressure for sure. And lenders don't typically want to make any changes to the mortgage unless both spouses agree. And typically you're going through a divorce because you don't agree on the majority of things. And it's often used as leverage. And you're right. It typically, if the spouses can agree, sometimes you can get it put into an open mortgage for a period of time, like maybe do a 6-month closed, which would have a lower rate. But the majority of the time, this goes into an open mortgage, and open mortgages currently are sitting somewhere in between 8 and 10%. And it becomes extremely expensive and unaffordable. And it puts a lot of pressure on the family law lawyer to then get this settled because the mortgage payment just increased by $300 or $500 as a result of reaching that date. There's not a solution for it other than coming to agreement or having both spouses agree to go into a 6-month closed term or something along those lines.
Right.
Yeah, it's tough for sure.
You get into a good point there. I did a little bit of research about the things that are required for somebody to be eligible here. And the individual that is buying out the other person is still going to be able to, they still have to demonstrate that they're going to be able to pay the mortgage. Okay. So yeah, in the prior discussion, you touched on something that is also very important, is that the individual is still going to have to qualify for the mortgage. Maybe you can talk a little bit more about that requirement and how it differs from in a normal situation of qualification for a mortgage.
Sure. So you are absolutely correct. Traditional mortgage qualification applies if you're taking over the matrimonial home in regards to income qualification. Sources of income might be employment income, so a job. We can also use child support for income, spousal support for income, Canada Child Benefit income as well. So those are all sources of income. If there's obviously pension or retirement income, we could use that. That's not typically the case. But then I just wanted to mention really quickly that sometimes when we have situations where somebody has stayed home full time, they typically struggle to qualify for a mortgage because their only source of income is child support and spousal support. And if there's 20% equity inside the property, those individuals also have the option of qualifying on 100% support income. So that's the normal thing. I also should just mention, and I might be jumping ahead, so I apologize if I do. On December 15th, the federal government changed the mortgage regulations that now say that divorcing couples can qualify again as first-time home buyers. So that's definitely a new, unique provision that is helping divorcing couples qualify for mortgages.
And just for clarity on that point, Krista, you mentioned divorcing couples specifically. Does it apply to common law couples as well? Or okay, wonderful.
Interchangeable. Sorry for my.
No, I just wanted to clarify. So thank you. That's wonderful.
One of the things that I came across, and I don't know that this is actually because you're now getting into the whole joint title requirement. Can this apply in other jointly titled situations? So not, I know you specialize in divorce, but can people that have joint title that aren't actually getting divorced take advantage of these types of things?
Yeah, so the provision is relationship breakdown. So that relationship breakdown can be a married couple, a common law couple. I've also done it for like a brother and sister who've owned a home together, that the brother and sister no longer got along due to an incoming boyfriend or girlfriend, and the brother and sister relationship broke down, which is super unfortunate. That's horrible. But anyway, we had to divide equity in that situation as well, that the sister left the house and the brother was staying in it. So yes, relationship breakdown is the key.
Okay. Yeah, no, I found that very interesting. So yeah, thanks for adding to that. I was like, this can't be true, but that's pretty interesting. So one of the other requirements, and I suppose either of you can, or both of you can comment on this, is the requirement for an appraisal and how that works and whether that is a smooth process or if there's some agreements, disagreements that can go on there. Krista, why don't you start, and then Casey, maybe you can chime in.
So typically in situations like this, we have to determine value of the property or confirm value of the property. So this is again something that we work with Casey on in determining value. So sometimes if we're accessing 95% of the property value, so that's considered an insured program in Canada. So when you're accessing more than 80% of your equity, it's considered insured. So we have to include one of the three insurers, CMHC, Canada Guarantee, or Sagan. And they will often do an electronic appraisal to confirm the value. And it's my job to communicate that back and forth with the lawyer, because property value matters for the division of the equity in that property. So if for some reason it doesn't pass the electronic evaluation, maybe because there isn't enough comparables, not enough sold comparables, then we I have to order an appraisal by a third party appraisal service. So clearly not a realtor. So let's get that clear. It's not a realtor. It's a licensed appraiser that does a third party appraisal. And again, I communicate that value with the family law lawyer so that they can work out the division of matrimonial property.
Okay, which is interesting because what we often see, depending on if you're acting for the spouse who's wanting to retain the home or you're acting for the spouse who's being bought out, they're going to have very different views as to what that value should be, right? Often we see the spouse who's wanting to stay in the home, they're usually trying to find a value that's maybe a little bit on the lower side. And the spouse who's getting bought out, they want to see that higher value.
Right.
So a lot of times we see a lot of conflict on our end and have to come up with sometimes some creative solutions here, because even if we had multiple appraisals going on, we've had appraisals that have ranged from hundreds of thousands of dollars at times, which has made it quite complicated. But sometimes it's just continuing to get more appraisals or getting realtors in even to give us some comparables to try and get a sense as to what that value is. So Krista, from what I heard from you, if a value is used in terms of the spouse who's trying to get the refinancing through this program, if then it doesn't pass that electronic appraisal that you mentioned, have you ever come across a situation where the value that it maybe does then propose, has that created issues in terms of whether or not the parties have been able to go through with this program? Or have you ever seen it create an obstacle and they're no longer able to proceed because it's come up with such a different value for the home?
Yeah, so mortgage brokering for almost 20 years, you can imagine the things that I've seen when it comes to appraised value, right? Because sometimes we're in a really hot market where things are appraising high, and sometimes we're in a really soft market where property values are coming in lower than anticipated. So typically it does happen where the property value isn't what we hope it would be. And so typically what we do in situations like that is, again, good communication in between you and I. Casey saying, okay, the property value came in, this is not what we anticipated. I can't give you all the cash that you were looking for because it doesn't exist. But can we maybe even out the division by now maybe transferring some pension or transferring some RRSPs or doing some other asset division opposed to being inside of the property? Because if it's not there, it's not there, right? We have to follow federal rules in regards to how much equity we're allowed to access. So that's where your skills come in, Casey. I've learned that lawyers are fantastic negotiators. So now your skill set comes in and saying, okay, we can't get everything that we want out of the property. How can we address this and divide property from here?
Absolutely. And that's what you're absolutely right. That's where those sort of creative solutions try and come in and offset it with other assets to try and move forward with the home as well. So that's fantastic to know. Thank you for that.
I will mention that a lot of lenders have an approved appraisers list. And so when I often work with both sides. So I'm often doing a pre-approval for a spouse to buy a new place and a spousal buyout to create the equity payout for the spouse that's keeping the house. So if I go and explain to both borrowers and to the legal counsel that every lender has an approved appraisers list. So I literally look at a website and there's a list of appraisers on that website that are approved by the lender. I can't influence value in any way. I'm the neutral third party. So I don't get to go order it myself. We just click the approve, choose an appraiser on this list that's associated to this lender, and they order it. That also often really helps parties to realize that nobody's influencing value here. It's a neutral third party that's just ordering an appraisal. That can sometimes help the situation in conflict over value.
That's great to know.
Mm-hmm. I am now curious, Casey, just to ask you further about, because obviously people are going through a divorce. There's going to be disagreements. What are some of the other types of difficulties or disagreements you've had between clients where you're trying to move forward with a spousal buyout?
Usually the biggest thing is trying to figure out what that value is. Like I mentioned before, it's not uncommon for both parties to go out and get their own appraisal. Sometimes you'll have parties who will get appraisals, they're not happy with the value, and it ends up not being shared. And so you find where they'll just continue to go through the list of finding one until they're happy with that value. And because there's so many appraisers out there, we often run into the roadblock of Spouse A wants the appraisal with the property valued at a higher value. Spouse B wants the lower value. And then it's trying to figure out a way to bridge that gap. So then are we saying, okay, we're picking a third one as a neutral appraisal, we're going with that value? Or sometimes we'll say, if they're not too far apart, we'll just take the average of the two to see if that works. But that usually is the biggest hiccup, is just trying to figure out what the value of the property is. It's much easier if both parties are wanting to sell the home, because in that case, you want the value to be as high as possible, right? It benefits everyone in that scenario. But when you have one spouse who's wanting to stay in the home, even if what value they're attributing to the property is quite reasonable and can be supported, it's not unusual for the other spouse to still think that it's on the lower side of things. So that's usually the biggest obstacle for us, but lots of scenarios to try and resolve it. Sometimes we see from parties they're a little bit reluctant maybe to get an appraisal done just because there's costs associated with it. So that's where we'll try and come up with scenarios of saying, okay, let's bring in some realtors, let's get them to give us some comparables, see what they might propose as a list price or what they think the house could sell for, that sort of thing, to try and at least get them some information to go off of, to see if it's enough of a discussion point for us so we can come up with a value that everyone is comfortable with without necessarily incurring the cost of the appraisal that way. So sometimes we'll try and be a little bit creative if costs are an issue for the parties, just to keep that down if possible.
Casey, have I ever mentioned to you the website honestdoor.ca?
I don't believe you have.
So there's this website called honestdoor.ca. It's a free website. You enter the property address and it gives the city value. So I'm losing my words here.
The tax assessed value?
Yeah, the tax assessed value. Thank you. Those are typically on the low side, but it gives a tax, and then it also does comparables, sold comparables, and it gives what it's referred to as an honest door value. It's a good place. It's a good place to start, but take into consideration that Honest Door cannot see the inside of a house. A house sold that was renovated and it's got this beautiful kitchen and new roof, new everything. A house like that's going to sell higher and affect that value. Or if your client has done a bunch of renovations and they feel that the property value, that's not going to be represented in the Honest Door value, but it's a great starting point to consider.
That's fantastic. Thank you for that.
Now I want to rush to honestdoor.ca as soon as we're done here, because I just got my tax assessment and I can't believe you just said that tax assessments are usually on the low side. I'm like, oh, no, this is way higher. I was like, I don't need to pay these taxes. My house isn't worth this much. But anyways, no.
Yes.
And exactly that. I'm like, the tax appraisers can't see the inside of my house, but it's been destroyed by children. But it's not as nice as they think it is. I had a thought though, when you were talking about the cost of the appraisals, is that something you can roll into being paid off, or is that not gonna fly to roll in? If legal costs could be, I was just wondering.
Yeah, I'm sure. Now, if it's a city appraisal, we're talking $300 to $500. We're not talking a lot of money here. Of course, you can write it into your minutes of settlement for sure for that to be reimbursed, but I haven't seen that per se. You could.
Yeah, I suppose if that's the expense, chances are it's not necessarily an affordability thing for people paying this off. If you can't afford the $300 to $500 for the appraisal, maybe you can't qualify for a mortgage. It's more not wanting to pay for it. It's probably in everybody's interest to just pony up and pay for the appraisal, is what you're saying. Yeah.
Yeah. For sure.
Okay. Now, it's been pretty apparent to me the financial benefits of proceeding this route rather than a traditional buyout situation. But, and maybe Casey's probably seen this with her clients, and I'm sure you have too, Krista, but what are some of the more intangible benefits to the individuals going through the process of going this route?
So many intangible benefits, because guess what? Your kids get to stay in the house. That right there, I think it's worth its weight in gold. Your kids are experiencing the breakdown of their parents. One parent's going to move out. There's lots of things going on there for children. So if you can keep the children in the matrimonial home, keep them with their same neighborhood friends, keep them zoned for the same school, I think that is incredibly important right there. You also allocate all of the money towards the family. Real estate fees are quite expensive. When you're not having to pay a realtor to sell your home, then, and you can allocate that money towards the family, that's also a really big savings. That might pay out the credit card balance by not paying real estate fees, or it might pay out your line of credit, your joint line of credit, instead of paying real estate fees. Those, I think, are the biggest two: stability for the children and allocating all of the funds possible towards the family, opposed to paying realtor fees for selling the house.
I think you're absolutely right with that. We see it time and time again. A lot of parents, their priority is having that stability for the kids. And sometimes there's a lot of sentimental value and attachment for the kids to stay in that home, right? We'll often see, even if some parents aren't necessarily sure if they can afford it, maybe the house is too big for them to stay in it, they still want to, solely because of the kids. If there's any way for us to work with that to make that a reality for them, that's certainly a benefit. So I agree with you absolutely on that point.
It's nice for the kids, for sure.
Are there any drawbacks of using a spousal buyout mortgage? It doesn't sound like it. Maybe there's just things for people to know going in, or things that can come up that might surprise people. Can you comment on that, Krista?
Sure. I would say, after doing so many of them, you get to see where people's surprise is. It's an insured program, as I mentioned. So it's administered by the government of Canada through the three insurers, CMHC, Sagan, and Canada Guarantee, which means that there is an insurance premium added to the mortgage to access that 95% of the property value. So it's a one-time fee that's added to the mortgage. Now, I should note that if you paid that insurance premium when you bought the house, we can transfer it. But if you didn't pay the premium when you bought the house, it's a new premium that's added on to the mortgage. And again, this is something that I like to say to the family law lawyer: hey, in order to access all of this equity, we are adding on a CMHC premium to cover this. Is this something that should be split in between both spouses, or is this the responsibility to be added to the person who's keeping the home? Again, not my decision. It's the family law lawyer's decision to work that out, but just an awareness that there is an additional cost to that. And sometimes people are surprised that they have to get an offer to purchase signed when they're accessing 95% of the property value. So I believe in doing a really good job of setting expectations up front. So if you set expectations saying these are the rules of this particular program, then you typically don't have troubles with them when people know what to expect.
Interesting. Okay.
Well, and Casey, do you have any just things of note from the lawyer perspective, like things you should know going into this, not just like that you would advise your clients of, that the clients should know, but also what lawyers, family lawyers, should know if they're helping guide their clients through using a spousal buyout?
Yeah, I think the sort of circling back to what Krista said near the beginning, the most important thing is for us going through and figuring out the terms of that agreement, right? Figuring out, okay, if spouse one is buying out spouse two, are we doing it on the full amount based on the equity in the home, or are we offsetting that amount? So maybe they don't have to qualify for as big of a mortgage in that buyout program, right? Trying to go through all of those scenarios, get all the disclosure in place so we can make that decision and help our clients figure that out. I think that is usually the starting point, and hopefully we can figure those out as best we can before we engage Krista, so then we can use Krista to the best of her ability to figure out what scenario may make the most sense for the parties. One question I did have for you, Krista, and I don't know if this is something that the program touches on or if it's even an option, but other times we see scenarios with clients where they are maybe faced with the unfortunate reality where they may not be able to retain the family home, but they're looking and saying, look, the mortgage we currently have is really favorable. We've got great interest rates. Do you ever see it where they're trying to port that mortgage to maybe a new property they're purchasing? And would that operate somewhat similar to the program you're referring to, or would it be different at all?
Okay, so that's a great question, because that's a huge reality right now, Casey, right?
Mm-hmm.
We've got clients that have like 1.49% or 1.99% on their mortgage, and mortgage rates today are sitting somewhere between 4 to 5. So that's a really big difference. So I have seen many different scenarios. I've seen people wait, keep the property the way it is in order to ride out that low interest rate, because from an affordability standpoint, when your payment is $400 cheaper a month because of the low rate, and then they just wait to divide matrimonial property until that is expiring. So when it's up for renewal, I've seen people pay it out and say it is what it is. I just need to get this done, right? You run into those types of situations for divorce. I've seen couples saying, okay, you get to keep that 1.5% rate for another 2 years. I have to qualify at 4.5%. So I've seen people pay their spouse for the difference in interest. I've seen all sorts of different situations involving those gigantic spreads in mortgage interest right now.
Okay, that's great to know because yes, it's very much a live issue at the moment, given the current mortgage rates.
Yes, for sure.
And this is getting more into sort of a general family law question for Casey. So much of what you guys do, you litigate divorce proceedings and all that, but there is a lot of alternative dispute resolution. And my understanding as a litigator that's not in family law is there is room for a lot of creativity in the way that you come to agreements and how you resolve things. Has that sort of been your experience when you're finalizing separation agreements?
Absolutely. We'll see a lot of scenarios where we try and be as creative as possible because sometimes having that creativity allows parties to keep certain assets intact, which can be more favorable. So one example would be a pension. But if we find a way to calculate what that value is as to what the other spouse may be entitled to, if there's a way for that first spouse to pay them that lump sum, which maybe it involves accessing some of the equity in the home to keep that pension of theirs intact, that can be a more favorable outcome to them, which still gives the other spouse what they are entitled to at the end of the day. So it's trying to come up with some of those creative solutions to almost offset the different assets and liabilities that we're working with to say, okay, even though we're dividing these, maybe whether or not it's a 50-50 division across the board or not, but dividing nonetheless, can we keep some of them intact and offset it with others? Another reason to do so is one spouse, if they're keeping the home, they might be limited in what they can qualify for. Mm-hmm. So if there's a way to keep that down, and maybe there's other assets and other concessions that they make, so they don't have to come up with such a huge mortgage to get that refinancing in place to pay out the other spouse, right? So if we can find ways to lower that as much as possible, which then would also help with ongoing monthly payments and whatnot for the mortgage as well. So absolutely, the more creativity, the better if it benefits the parties. We're huge supporters of that.
And if you don't mind, Casey, I'll just jump in and say, and I think that's where it's really important that we work together early on. Mm-hmm. And early on, like once you know roughly what child support is, once you roughly have a range of spousal support, once you roughly know that the equity payout might be in between $20,000 to $50,000 or whatever, once you have some rough guidelines, that's when I really like to get involved because it can make a big difference. Like when I can come back and I can say, we can qualify for this, but we can't qualify for this, then that allows you to be like, okay, we can only get $30,000 as an equity payout and we can only pay $1,000 in spousal support or whatever, right? But so $1,500 is a decline. $1,500 a month in spousal support is a decline in the mortgage, but $1,000 in spousal support is an approval. That's important to know. I want to work with you to say before those minutes of a settlement are signed to put all those numbers together and say, this is the maximum that we can do. Can you go back and negotiate it on the other side to sign those minutes of settlement?
Krista, from your perspective, best time to get in touch with you would be when we've got a few of those items, even if it's just estimates in terms of spousal support, child support obligations. I suspect we'd have some information regarding employment income if that's available. Yes. Get that information to you to start with so you can start helping us run some of these scenarios. And then as more information presents itself along the way, you can then use that information to fine tune those details a little bit.
Yeah, once you established who's looking to take the matrimonial home, once you've established some of these things, and maybe both spouses want to keep the matrimonial home, but it's like, can each spouse keep the matrimonial home? So once you have some of those things hashed out in estimates of things, that's when I like to get involved, Casey, and say, hey, this works this way, but doesn't work this way.
Wonderful. That's great to know. I'll be reaching out to you a little bit earlier now these days.
Yeah. What's
the on that? No. Oh, sorry. You go ahead.
Having gone through my divorce before, signing those minutes of settlement for me took me 3 years. It was a long, arduous, painful, expensive process. So I don't want anybody signing those minutes of settlement until I know that both people are qualifying on the other side, because amending minutes of settlement totally sucks. So we don't want people to have to do that. So let's make sure everybody qualifies for everything that they're looking for before those minutes of settlement are signed, please.
Definitely.
So I was just going to say on that note, Krista, what are some of the other things that, whether it's the people involved in the process of lawyers, what are things that they should avoid doing in order to, so they're not getting themselves into sticky situations with, minutes of settlement that don't actually work out with what you need?
Okay, so don't buy a house before your minutes of settlement are signed. Just don't do it. Lots of people are like, okay, they're excited, right? They want to know what that next chapter looks like. And that's often what people worry about at night is, where am I going to live? Where are my kids going to live? What does this look like? So they want to move on to solve that next chapter of their life. But we cannot allow clients to go purchase a new home that requires mortgage financing without the minutes of settlement being signed. Because again, we put a timestamp on something that say you need to have these minutes of settlement done by this point in stage, it becomes a lot more stressful and it becomes a really difficult situation, because every mortgage company wants to see what the division of the divorce is, because we have to know, is there child support payable, spousal support payable? Don't buy a house before your minutes of settlement are signed. Also, don't go buy a new car. Don't make any large financial decisions while you are settling your divorce.
That is great advice. And we usually suggest the same to our clients.
Mm-hmm.
On that note, we are getting a little bit short of time, but I do want to give you guys each an opportunity for some closing thoughts in case there was anything that we missed, or if there's just some general messages you'd like to leave people with. Krista, you're our guest, so I want to give you not the very last word. I get the last word. You get the second last word. I'm going to turn things over. Casey, do you have any closing comments or things that you want to leave our listeners with before we finish up?
For the most part, I think I just want to really thank Krista for giving us a lot of this information. It's extremely useful in any separation, divorce. It is so fantastic to have a program like this available, because separation is such a daunting and overwhelming process, especially if you feel like you may not be able to stay in the home that you want to stay in. So even just knowing that this is an option, whether or not it actually works and they can see it through, but it gives them an option to explore, which I think is fantastic. And I hope as time goes on, there can be more and more options like this available to separating couples. So thank you very much for providing us with further insight on that today. It's appreciated.
Casey, thanks for giving me an opportunity to talk about it, because I have learned through years and years of doing this that not all banks, so your natural default when you're going through divorce is to go to your bank, right? That's what you think that you should do. And a lot of banks don't know that this program exists. So therefore they're like, you don't qualify, you need to sell the house. That's devastating news to some people. And if you find a broker that specializes in this area, there is often there's a whole bunch of more options when you go see a broker. And this program is done at best discounted interest rates. There's not lots of fees, or there's lots of people think if you go to a broker that there's fees or higher interest or anything like that. Is not the case at all. This is done at best discounted interest rates. Typically, I'm paid by the lender, so there's no fees for my services. It's just a great option for individuals to contact a broker opposed to just chatting with the bank, because the bank may tell you that there is no other option because you don't have enough equity. So I'll leave it at that.
I'm convinced this has been very educational for me, and I'm sure it will be also for our listeners. I do want to thank you so much for coming to join us, Krista. It's been awesome to have you. And Casey, thank you to you as well. I know you're missing out on billing hours right now, so I appreciate you being here. And honestly, about 30 years post parental divorce? Maybe you guys have also inspired me to maybe start considering family law as part of my future. So I do. You guys you radiate positivity, and it just makes me feel a lot better about the whole thing. So anyways, thank you so much to both of you, and thank you to our listeners, and we'll catch you on the next episode.
You've been tuning into the Lawyer Up with HMC podcast with your host, Kristen Hagg. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, hmclawyers.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.